The Zambian government will raise capital for its sponsored financial institutions in the country and those in which it has shareholding interests in the country. This move is aimed at enhancing support towards local, small and medium entrepreneurs to grow the economy. For more on this, we are joined by Trevor Simumba, Managing Director at Sub-Saharan Consulting Group. Trevor, thank you so much for joining us. Right from the onset, how does capitalizing these particular institutions, which the state has shareholder status in, impact on the broader industry?
Yeah, first of all, I think it's the motive behind it is very good from the Zambian government, because they have realized that the SME sector is really the driving force of any economy. And in particular in Zambia, the SME sector is very important. And there's been a lot of pressure politically and socially for more involvement of Zambians, what we call indigenous Zambians, in the running of the economy, in the industry of the economy, particularly in the mining sector. And so I think this is a response by the government to that effect, and particularly with the fact that the financial sector in Zambia is not as deep as it should be. And so access to finance for SMEs is very difficult in the commercial sector. And so the government, I think, wants to recapitalize the Development Bank of Zambia, right, which it has a majority stake in. And I think there's also a savings bank that is used mainly by a lot of public servants, the National Savings and Credit Bank, which the government owns.
But I'm sure, Trevor, that the merits of or the rationale behind the capitalization is possibly well received. But if you look at the other players in this industry, your Barclays, your Standard Chartered, how are they receiving the news of these financial injections that are going into institutions that would traditionally be their competitors? Yes,
and this is where the problem is, because what happens is that you are distorting the market. I think it would have been better for the government to look at the whole financial sector rather than to pick and say we are raising finance specifically just for the development banks, because what it implies as well is that the development banks will have less stringent criteria for accessing this money, which means that the perception by those that will borrow is that, well, I don't necessarily need to pay it back because it's government money. So I think the government should have found a better way to ensure that these funds go to across the financial sector, both with the banks, the private banks, and also with the government banks, so that you have a level playing field, and then that way the development banks, the government banks will have to compete at the same level.
It seems though, Trevor, that the Zambian government is on a very clear journey of deepening the capital markets in Zambia. I mean, we've seen the inaugural IFC bond that has been issued of 2.5 billion kwacha. In your view, do you think that this is likely to become the order of the day, and are we likely to see more initiatives of this nature?
I hope so, and in particular, I hope that the IFC bond actually is very important. It shows that the capital markets in Zambia are beginning to mature. So what you'd like to see is the Standard Charters of this world, the Citibanks of this world begin to also go to the capital markets to raise bonds in order to finance projects in Zambia.
Let's look at the impact on the local currency. Of course, this 2.5 billion kwacha bond was issued in the kwacha, which is the first time that we've seen that happen in Zambia. What are the implications of using the local currency?
Yeah, what it means is that also it puts a lot of pressure on the central bank in terms of monetary policy to ensure that they maintain some stability in the local currency, because the biggest risk with local currency loans is the foreign exchange risk. And so it implies that the government needs to be very careful in how it manages its foreign currency movements, and that the kwacha remains stable, especially against the dollar and the rand, because those are the two currencies that we are using a lot for our trading.
Before I let you go, of course, there hasn't been much clarity in terms of where these funds are going and what they've been earmarked for. Should we just be working on the assumption that this is for big projects for development purposes?
Well, no, we shouldn't make an assumption. I think this is where government needs to come clearly and state which sectors they are prioritizing, and in those sectors also there are some subsectors. So for me, my choice would be that we focus on value addition, both in the agricultural sector and also even in the tourism sector, and also in manufacturing. So we should be targeting manufacturing that will supply to our key sectors such as mining, So we should see more manufacturing of some of the components that we're currently importing. I think that would help us a lot, you know, to link agriculture as well with manufacturing. That would be very critical.